Hey guys, it is Julie here with TipRanks, and today we're taking a look at the latest ratings from the #1 ranked analyst on all of TipRanks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're using the TipRanks top expert page to take a look at the most recent activity of one of the highest ranked guys on Wall Street right now. We're going to take a look at these stocks, how the other analysts weigh in, and of course what our top analyst is predicting for the stock's future. Don't forget you can also download the TipRanks mobile app if you want to access the wisdom of thousands of Wall Street analysts on the go. Links will be in the description down below. Now let's head over to the TipRanks top expert page. Here you'll find a variety of top experts, including financial bloggers, research firms, and corporate insiders. But today we're focused on top Wall Street analysts. And coming in #1 out of over 8,500 Wall Street analysts, we have Neil Dingham. He covers the basic materials sector for Truist Financial. He has a success rate of 76% over the past year, with an average return of over 30%. And Neil has reiterated several buy ratings in just this last week, including some price target increases as well. So we're going to take a closer look at those. Now, the most recent rating he came out with was a buy on Permian Resources. Neil reiterated his buy rating on Permian Resources on September 20th. This is a stock that he's rated 31 times before and has a 90% success rate on. And this is a stock that has seen some huge growth in recent years. Trading under the ticker PR, they're currently priced at $13.24 per share, but a year ago, they were down around $6. They've seen growth of 102% and have climbed 41% in the last 6 months. They do score a 9 out of 10 on the TipRanks Smart Score, and the stock also pays a dividend that comes in with a yield of 1.48%. Permian Resources is a hydrocarbon exploration and production firm based in Texas. They're operating in one of the state's richest oil and gas producing regions, the Permian Basin. This formation has, in the past couple of decades, put Texas back on the world map of major oil producers. And Permian Resources is a pure play operator in the Delaware Basin, one of the richest parts of the larger Permian. The company boasts 180,000 net acres, which are 90% operated and 50% oil. The company reported their Q2 earnings results back at the start of August, and they did come out with a miss on both earnings and revenue. However, the stock has continued to rise. They reported Q2 revenue of $623 million, which did rise over 30% year over year, but fell $20 million short of analyst expectations, and earnings per share of 21 cents fell 11 cents short of estimates. The company did note an 8% increase in their both crude oil and total average production, and management did comment that they recently reduced their operated rig count from 7 to 6 rigs due to continued efficiency gains, and that they remain on pace to achieve their full year and fourth quarter production targets, highlighting the strength of their operations. And a few weeks later, they also announced that they would be acquiring Earthstone Energy. This will be an all-stock transaction worth about $4.5 billion and will create a $14 billion premier Delaware Basin independent E&P. Overall, Wall Street does seem to agree with our top-ranked analyst Neil there, as the stock does come in as a strong buy with 13 current analyst ratings. That breaks down to 10 buys and 3 holds with an average price target of $16.85. That would be an upside potential of over 27% from current prices. Down below, we can see our most recent rating just 2 days ago does come from Neil, who gives the stock a buy with an upside of 43%, and there are several other analysts with the same price target. On the low end, we do have a hold rating from last month with an upside of 6% and a high-end price target above 50%. Now, going back a couple more days, Neil also reiterated a buy rating on ConocoPhillips. Neil reiterated his buy rating on ConocoPhillips on September 18th. Now, he has rated this stock 19 times before with a success rate of 94%. The ConocoPhillips stock trades under the ticker COP. Currently priced just shy of $120 per share, they have seen some ups and downs this year, seeing big growth here but cooling off into the spring and climbing back recently. Overall in the past year, they are up 15% and have seen growth of 25% in the last 6 months. They score a 9 out of 10 on the TipRanks Smart Score, and once again we have another dividend-paying stock, currently at 60 cents per share for a yield of 3.65%, and their ex-dividend date is my birthday. ConocoPhillips is a global oil and gas company. With a history dating back to the late 19th century, ConocoPhillips stands as one of the world's largest independent E&P firms. They are actively involved in searching for and extracting oil and gas resources and operate in various regions worldwide, including the Americas, Europe, Asia, and Australia. They maintain a diversified portfolio of assets that encompasses both conventional and unconventional resources. They shared their Q2 results near the start of August, and once again, we do have a company falling short of analyst expectations. However, their saving grace was an increase to their full-year production guidance. ConocoPhillips reported revenue of $12.37 billion for the quarter, and their earnings per share of $1.84 did fall short, but they did come out with a record company and lower 48 production of 1,805,000 barrels of oil equivalent per day. They said that they achieved record production and increased their full-year production guidance for the second consecutive quarter. Looking ahead, they remain constructive on the second half of the year, as well as the long-term outlook for the sector. And once again, Wall Street analysts seem to agree on that favorable outlook, as the stock does come in as a strong buy with 15 current analyst ratings. That strong buy breaks down to 13 buy ratings and 2 holds, with an average price target of $136, which would be an upside potential of 14%. But our top analyst, Neil, is feeling more bullish than the rest of the street here. His recent buy rating was an increased price target to $160, which would be an upside of 33%. On the low end, we do have a hold rating here last month, nearly 6% upside, a lot in those mid-teens, and our top analyst is actually our high-end price target. And Neil's third recent buy rating is on APA, or Apache Corporation. He reiterated this buy rating on September 17th and has rated the stock 34 times before with a success rate of 59%. Their stock trades under the ticker APA, currently priced at $40.51 per share. And this is another one that cooled off and has been climbing more recently. In the past year overall, they're up 13%, seeing more growth of 21% in the last 6 months. They score a 10 out of 10 on the TipRanks Smart Score. And once again, we have a dividend. This is a 25-cent quarterly dividend for a yield of 2.34%. APA is an energy company that carries out the exploration, development, and production of natural gas, crude oil, and natural gas liquids. The company is engaged in hydrocarbon exploration, with majority of their production in the United States. They also have operations in Egypt and the North Sea. And finally, we do have a company that came out with both an earnings and revenue beat in their latest quarter, which they shared with us near the start of August. They reported revenue of $1.8 billion, which did decline year over year, but came in over $200 million ahead of expectations, and earnings per share of 85 cents came in 10 cents ahead of analyst estimates. The company did generate net cash from operating activities of $1 billion and said that they were on track to deliver total adjusted oil production growth of more than 10% for the year, driven by U.S. and Egypt performance. Management weighed in, saying that global adjusted production was at the high end of their expectations, led by above-guidance oil production growth in the Permian Basin. But Wall Street is a bit more divided on APA. The stock does currently have 15 analyst ratings, but comes in as a moderate buy. And that is because we do have 2 sells in the mix here, along with 6 holds and 7 buys. The average price target of $48 would be an upside of 19%. Down below here, of course, our top analyst, Neil, is bullish on the stock with a buy rating and an upside of nearly 46%. But you can see a couple sell ratings, one with an upside still, but one with a downside of nearly 16% here, a hold with a downside of 6%, and some others kind of falling in the middle. So those are the 3 most recent buy ratings from the #1 ranked analyst on TipRanks. Let me know your thoughts on these 3 companies in the comments down below, and what other top analysts you like to follow. I always love hearing from you guys. Of course, please keep in mind that these videos are never a suggestion to buy or sell any specific stock, just showing you what these Wall Street analysts are up to and providing some insight and entertainment. Please make sure you're always sticking to your own investment plan. Thank you guys so much for watching. I hope you have a great day, and I'll see you back here next time.